Impressive gains there. NSE 20, that's up 33.32 points. What's your analysis of what's taking the markets up?
To be sincere, actually, we've seen the effect you're having on the equities market is actually informed by the fact that market yields have really been going up, coming down. We've seen yields on a lot of bonds really coming down, and we are seeing a shift from bond market into the equities market. And this is what is pumping up the volumes and, of course, causing the share price appreciations.
Big news, of course, expected tomorrow, the full year results 2009 for Equity Bank. How's the share price reacted to that news?
Equity Bank today has been stable compared to yesterday's share price, but there has been a lot of significant volumes. There have been very large volumes, actually close to 40% of the market, and most of these turnover actually has been between as a result of cross books between foreigners. So we are seeing a situation whereby a foreigner is exiting at the same time a foreigner is coming on board.
Are we seeing position taking there ahead of tomorrow? And what's your analysis of the bank itself? We've seen it cut off its investment bank with absolutely no sales in 2009. How do you see that impacting its bottom line?
I believe it could impact positively, given that the investment bank wasn't really performing. And it came at a good time because last previous financial year, actually, that particular arm of the business reported a 56 million loss. And this was definitely impacting negatively on the entire entity, Equity Bank. So we believe that the closure was well advised, given that it will allow the bank to concentrate on its core business, which is commercial banking. And they're doing very well on that front, given that they're going regionally, opening branches into Uganda. And we believe more business is also going to come from Uganda. So it's only better that they concentrate on their core business, which is commercial banking, and leave the investment banking to investment bankers themselves.
So what are you telling investors? Is this a stock to look out for?
Definitely it is a stock to look out for, especially on the renewed foreign interests. And we believe that these foreigners could also actually be advising on the strategy of the business, which is a good thing because nowadays banks are actually going global, and we're already seeing equity going regionally and maybe expanding further beyond. Okay.
Let's look at another company that's been on the news quite a bit this week, and that's Kenya Airways. How's the share price responding to the fact that flights have finally resumed? Yesterday, about 50% sales were from foreigners, perhaps just indicating investor interest on that particular counter, or anxiety based on what was happening in the industry. How did the share perform?
Surprisingly, Kenya Airways share price has not really, it has not been affected by the recent closures of airports worldwide, and we've seen it maintaining at 59. And even though earlier they had announced that they are losing close to $1 million every day, but investors have taken cue that this wasn't so prolonged, and so given the duration, the short time it has been closed, we don't see really significant losses coming forward in the next financial year. So the share has really maintained well.
Let's look at agriculture counters. Now, tea and coffee were a favorite in Q1, but seems they are going on the downward trend. Kapchora tea is down 6 shillings today. It was the biggest loser of the day. Williamson tea was down 19 shillings yesterday at the close of trading. Have we come to the bottom of the cycle for the tea and coffee counters, or do you still see them coming down? And how do you explain what's happening there?
I could see a lot of profit taking happening right now, because the tea and coffee stocks have actually been on a steady rise, and this was influenced previously by their the expected good earnings, given that last year the international tea prices were very, very high. It actually record high levels, and going forward we see weather pattern very working well for most of the tea farmers, and so we expect that there isn't really going to be, there could be sort of like a glut in tea production. Therefore, we don't expect share prices, tea prices to really appreciate, and based on this, then we can only explain that investors are profit-taking from earlier price gains.
Going forward, as we come to the end of the week, do you see the rally at the NSE being sustainable?
The rally is definitely going to be sustainable as long as interest in equities continues to build up, okay, as opposed to the other side of the bond market. And this is still going to maintain the current good performance of most of the share prices, with the most outlook going to be amongst the financial counters. And even Kenya Re, because we've seen it's the only counter that previously is continuously reporting profits, but at the moment it hasn't really appreciated, and we believe that going forward it could be a counter to look out for.